Assalamualaikum and hello everyone. Today we would like to discuss Chapter 5 Manufacturing Overhead. In this video for lecture session that covers subtopic 5.1 Manufacturing Overhead Concept, 5.2 Comparison among Actual Costing System, Normal Costing System and Standard Costing System, and 5.3 for Normal Costing System. At the end of this lesson, students should know the concept of actual overhead cost, applied overhead cost, and estimation overhead cost, make comparison of actual costing, normal costing, and standard costing, the advantage of using normal costing system versus actual costing system, calculate predetermined overhead rate, calculate the product cost per unit, clarify and calculate under-applied and over-applied overhead. 5.1 Definition of manufacturing overhead. Manufacturing overhead is all manufacturing costs other than direct material and direct labor costs that supporting the production process. Overhead costs are recognized as indirect manufacturing costs or factory overhead or production overhead. Example, indirect raw material, plant rent, indirect labor, plant utility, plant insurance. Concept of manufacturing overhead. The concept of actual overhead, estimation overhead, and applied overhead. Concept of actual overhead refer to the amount of indirect manufacturing costs actually involved in certain period of time. Example, telephone, electricity, and water bill. The bill amount will only be known when we receive the bill. Estimation manufacturing overhead refer to planned or scheduled manufacturing overhead costs for the future. Actual manufacturing overhead cost is the unknown. That's the meaning of estimation manufacturing overhead. Example, Syarikat Awas dan Berhad make an estimation for overhead such as supervisor is estimate 100,000, plan depreciation estimate 7,500, the machine repair Syarikat Awal estimate 25,000. But the actual amount is the unknown. Apply overhead, calculate overhead estimation based on actual activity. The formula for apply overhead, predetermined overhead rate should be multiplied with basis activity. Difference between the actual overhead cost incurred and the amount of overhead applied, there will be over or under applied. 5.2 Comparison between costing system. So for actual costing, taking into account the actual cost of direct material, the actual cost of direct labor, and then the actual cost for manufacturing overhead. For normal costing, taking into account the actual cost of direct material, the actual cost of direct labor, and then applied manufacturing overhead. For standard costing, standard cost for direct material, standard cost for direct labor, and then standard for manufacturing overhead. So the comparison between costing is the amount for direct material, amount for direct labor, and then amount for manufacturing overhead that taking into account. Advantage of normal costing system compared to actual costing system. So the first advantage is product pricing can be determined in advance. Then the cost of product will be remain at a certain time period for using the same overhead rate. 5.3 Determination of product cost per unit using normal costing system. Manufacturing overhead costs were absorbed or applied into product using predetermined overhead rate. So the formula for POR is estimation total manufacturing overhead cost should be divided with estimation basis activity, or the other name we call cost driver. So the basis activity for calculation POR, predetermined overhead. So the first activity, direct labor hours. Second, direct labor cost. Third, machine hours. Fourth, direct material cost. And then the last activity is production unit. Determination of product cost per unit using actual costs. Actual direct material, actual direct labor, actual manufacturing overhead to calculate product cost under actual system. Determination of product cost per unit using normal system. Actual direct material, actual direct labor, but for manufacturing overhead, we use applied manufacturing overhead to determine product cost under normal costing. Under applied and over applied, the difference between overhead costs applied and the actual manufacturing overhead is called either under applied or over applied overhead. If applied manufacturing overhead is bigger than actual manufacturing overhead, the difference we identify as a over applied overhead. Then, if applied manufacturing overhead is smaller than actual manufacturing overhead, the difference between overhead we call under applied manufacturing overhead. Adjustment of under or over applied overhead. Adjustment need to done at the end of accounting period using cost of goods sold account. So the journal entry is for over applied overhead, manufacturing overhead should be debited, then should be credited cost of goods sold. For under applied overhead, cost of goods sold should be debited, then manufacturing overhead should be credited. Thank you.